When I first stepped into trading, I was convinced that the harder I worked, the more money I would make. I treated it like the gym, like if I just put in the hours, eventually I'd come out stronger and more skilled. So I did what most beginners do. I filled my desk with multiple monitors, each one plastered with charts and indicators. I kept a stack of notebooks nearby where I scribbled down every thought, every hunch, every headline. And of course, the ever-present coffee cups piled up like trophies of my discipline. But what I didn't realize was that this approach was silently killing my edge. I wasn't getting sharper. I was getting scattered. I was exhausting myself on things that didn't matter, chasing setups that had no real edge, convincing myself that if I just watched longer, I'd somehow beat the market. The truth hit me the day I sat down and reviewed 6 months of trades. I wasn't proud of what I found. Out of maybe 200 trades, a very small handful accounted for nearly all of my profit. Less than 20%. The other 80%? They were noise. Trades I forced out of boredom. Trades I justified because I saw something on a lower time frame. Trades I convinced myself were valid just so I wouldn't feel like I wasted my time at the desk. That discovery was my introduction to the 80-20 rule. Most people hear about it in business, or productivity, or even in fitness. It's the principle that 80% of your results come from 20% of your actions. But when I looked at my journal, I realized it applied perfectly to trading. It was humbling. Here I was, putting in countless hours, staring at charts late into the night, sacrificing my social life, burning myself out. And yet the majority of that effort wasn't moving me forward. In fact, it was dragging me backward. My worst trades, the ones that cut into my account the most, all came from that bloated 80%. That realization sparked another question. Why was I wasting so much energy on low-quality trades? The answer came when I dug deeper into psychology. Decision-making is not infinite. Studies in behavioral science show that our ability to make clear, rational choices is like a battery. Every decision we make throughout the day drains that battery a little bit more. This is called decision fatigue. By the time I sat down to trade after work, after dealing with a commute, emails, family responsibilities, and whatever curveballs the day had thrown at me, my mental battery was already low. Yet there I was, demanding that I make precise, high-stakes financial decisions in that state. It's like trying to run a marathon after already finishing a full gym session. You don't have much left to give. Add cortisol into the mix, and it gets even worse. Cortisol is the body's stress hormone, and when it spikes, it clouds judgment. The same chemical that kept our ancestors alert when predators were nearby now works against us in front of the screen. Staring at charts too long, watching price wiggle up and down, constantly feeling like we're missing something, it all spikes cortisol. That means even when I thought I was focused, my body was in a fight or flight state, reacting emotionally instead of logically. The result was predictable: more hours at the desk, fewer quality decisions, and more trades that had no business being taken. I was mistaking activity for productivity. I was mistaking time spent for value created. This is where the 80-20 rule became a lifeline. When I looked back at my profitable trades, I noticed they all had something in common. They weren't complicated. They weren't forced. They were simple, clean setups that fit my plan perfectly. And they didn't come every day. Some weeks, they didn't even come at all. But when they did appear, they were the ones that mattered. It forced me to rethink everything. Instead of trying to do more, I asked myself, what if I did less, but better? What if instead of spreading myself thin across dozens of charts and setups, I identified the small handful of patterns that truly delivered results, and I built my trading life around those? That became the cornerstone of my shift from chaos to clarity. The 80-20 rule wasn't just a nice idea, it was a mirror. It showed me that most of what I was doing wasn't trading. It was noise, stress, and self-sabotage. The profits came not from being everywhere, but from being precise. And here's what I want you to see. If you're a part-time trader, especially if you work a 9-to-5 job, you already know that your time is limited. You don't have the luxury of sitting at the desk from London open to New York close. You don't have endless mental bandwidth to monitor 10 charts at once. What you do have is a small window of focus, maybe an hour, maybe 2 if you're lucky. That's not a disadvantage, it's an opportunity. Because the 80-20 rule says you don't need more time. You just need to find your 20% and ignore the rest. Think of it this way. If you had 1 hour a day to prepare a meal, would you spend 50 minutes running around looking for random ingredients and 10 minutes actually cooking? Or would you identify the key ingredients, prep them with intention, and cook a clean, quality meal? Trading is the same. Most traders waste their time running around. The ones who last treat their hour as sacred. That's the lesson I learned the hard way. Trading success does not come from drowning yourself in screens. It comes from sharpening your focus, conserving your energy, and only executing when your 20% shows up. Anything else is just noise. When I finally understood that only a fraction of my trades were driving my growth, I had to face the harder question. Why did I keep filling the rest of my trading log with garbage? Why did I keep clicking buttons when deep down I knew the setup wasn't clean? Why did I keep convincing myself that maybe this time it will work when all the evidence pointed otherwise? The answer wasn't technical, it was psychological. And that's what most traders miss. They obsess over indicators, strategies, and market hacks, but they ignore the invisible drivers that push them to act. If you don't uncover those triggers, you will keep repeating the same mistakes, no matter how many hours you study. Let me take you back to one of my early routines. I used to come home from a full work shift, sometimes exhausted, sometimes frustrated, and I'd sit down to trade. On the surface, it felt like discipline. I'm showing up. I'm committed. But in reality, I was dragging the weight of the entire day into the market. If my boss had been on me, if traffic was a nightmare, if I was already drained, I wasn't showing up with a clear mind. I was showing up with baggage, translated into shortcuts, trading without fully analyzing, skipping the checklist, convincing myself I knew what would happen, and frustration translated into forcing trades that weren't really there. The problem with being a part-time trader is that you are often entering the market already tilted. Unlike full-time traders who can wake up and design their whole day around peak performance, you have responsibilities pulling at you. Commutes, deadlines, kids, emails, calls. By the time you get to the charts, your mind is already fragmented. That fragmentation becomes the fuel for emotional trades. Think about boredom. How many times have you opened your platform during your lunch break, scrolled through a few pairs, and convinced yourself to take something just so you wouldn't feel like you wasted the time? I did it constantly. I would stare at the screen for 20 minutes, feel restless, and then jump into a setup that I knew didn't meet my criteria. Why? Because boredom itself was the trigger. My brain didn't want to leave without a dopamine hit, and clicking buy or sell gave it exactly that. Then there's overconfidence. This one is dangerous. On the days where I caught a clean move and felt unstoppable, my trigger wasn't stress, it was euphoria. I felt like I had cracked the code. So what did I do? I started chasing everything. I doubled my lot size on the very next trade. I jumped into pairs I hadn't touched in weeks. I broke every risk rule I had just because my brain was high on dopamine. The high of a win was just as destructive as the low of a loss. And of course, there's revenge trading. This was probably the most consistent trigger in my early career. If I lost a trade, I couldn't leave the screen. I had to get it back. I would move to a lower time frame, scan every pair I could find, and click the button just to prove to myself that I wasn't wrong. But every time I did this, the result was the same. The market punished me harder. When I finally started journaling, not just the technical details, but the emotional state behind each trade, the pattern became crystal clear. It wasn't about the market. The market was just moving. The problem was me. My trades were a reflection of my state, not my edge. If I came to the chart tired, I took sloppy trades. If I came frustrated, I forced trades. If I came euphoric, I overleveraged. This is the reality most traders don't want to face. Your biggest enemy isn't your strategy, it's your state of mind. That state is shaped by triggers, and most of those triggers come from outside the market. So how do you recognize them? One exercise that changed everything for me was what I call the two-column journal. In the first column, I wrote down the technical details of every trade: entry, stop, target, why I took it. In the second column, I wrote down my state of mind when I took it: how tired I was, what emotions I felt, what thoughts were running through my head. After a few weeks, I saw patterns I never would have noticed otherwise. For example, I noticed that on days where I had less than 6 hours of sleep, my win rate tanked. It didn't matter what the market was doing. My lack of rest meant my decision-making was sloppy. That became a non-negotiable trigger for me. If I didn't sleep, I didn't trade. Simple. Another pattern I noticed was that my worst overtrades came after arguments or stressful conversations outside of trading. I would carry that emotional energy into the market and try to burn it off by trading aggressively. Once I saw this, I started setting a rule. If I felt emotionally charged, I delayed trading until I reset. Journaling doesn't just show you the trades. It shows you the story behind the trades. And once you can see the story, you can start rewriting it. Here's the key lesson. Your triggers are not always obvious. They hide behind excuses. I just wanted to be disciplined. I thought I saw something on the 15-minute chart. I didn't want to waste my session. But underneath those excuses are the real drivers: stress, fatigue, boredom, overconfidence, frustration. Until you call them out, they'll keep running your trading without you realizing it. When I finally connected the dots, I understood why the 80-20 rule felt so hard to follow. It wasn't that I didn't know which setups were high quality. It was that my triggers were constantly pulling me into the other 80%. My psychology was sabotaging my statistics. And if you're trading with limited time, you need to be even more aware of this. Because in your 1-hour window, the temptation to force a trade is stronger than ever. You don't want to walk away empty-handed. You don't want to admit that nothing set up during your session. But the truth is that restraint is exactly what separates professionals from amateurs. So before you can embrace the 80-20 principle, you need to identify what pushes you into the 80% of bad trades. That's the work most traders skip, but it's the foundation of consistency. Once I understood the triggers that sabotaged my trades, I realized insight alone wasn't enough. Awareness without action is useless in trading. I needed systems, structured habits that would channel my limited time and energy into high-quality trades, rather than allowing stress, fatigue, or boredom to dictate my decisions. That's where my transformation began. The first system I built was time blocking. I knew I couldn't control the market, but I could control my environment and my focus. For me, that meant carving out one dedicated hour per day for trading. 1 hour of uninterrupted attention, nothing else allowed. No emails, no social media, no multitasking. Just me, the charts, and the setups I had proven worked. At first, it felt almost sacrilegious to leave the other hours untouched. I had this nagging fear that I would miss something, that the market would explode while I wasn't glued to it. But the 80-20 rule reminded me that the moves that truly mattered would appear in that focused window, and everything else was just noise. This 1-hour block became sacred. I started treating it like a business appointment with myself. I put it on my calendar, set reminders, and mentally prepared the same way I would for a client meeting. Showing up became predictable. I didn't have to debate whether I should trade or not because the system made the decision for me. This simple structure immediately reduced the mental load, freeing my decision-making for the trades that mattered. The second system was checklists. I created a pre-trade checklist that I had to complete before clicking buy or sell. The checklist included 3 essential elements: confirmation that the setup matched my high-probability patterns, verification that risk was clearly defined and acceptable, and a mental check of my emotional state. Was I calm, focused, not chasing, not trying to make up for a bad day? If I failed any of these, the trade didn't happen. At first, it felt tedious, almost restrictive. But that checklist became a gatekeeper, preventing emotional impulses from hijacking my trading account. The third system was narrowing my playbook. In the early days, I tried to trade everything: multiple pairs, multiple time frames, every indicator under the sun. I thought versatility was strength. In reality, it was the opposite. It diluted my focus and increased cognitive load. By committing to a small number of markets and setups, the 20% that had proven profitable, I reduced the noise drastically. Now, when I looked at a chart, I knew exactly what I was looking for. My brain didn't waste energy scanning irrelevant patterns. This simplification alone improved my accuracy and speed dramatically. Alongside these core systems, I built routines to maintain clarity. Micro resets became a critical tool. Before each session, I would spend 5 minutes away from screens, doing a breathing exercise, stretching, or stepping outside. It sounds trivial, but these small rituals gave me a mental reset, letting me enter the charts with a clear mind rather than the residual stress of the day. After a few weeks, I realized these micro resets were as important as the strategy itself. They shielded me from the emotional triggers that had once led to overtrading. I also incorporated logging and journaling into the system. Not just basic trade details, but a full cognitive audit. Every session, I would write down how I felt entering each trade, whether I was tired, impatient, or confident. I noted patterns of distraction, fatigue, and overconfidence. Over time, the journal became a feedback loop. It revealed the hidden triggers still at play and allowed me to adjust the system proactively. My trade stopped being reactive and became methodical, deliberate, and repeatable. Another critical system was defining risk in absolute terms. I learned to quantify exactly how much I could lose per trade and per session before I ever touched the charts. This gave me freedom. Once risk was capped, I could trade without fear or anxiety because the downside was predetermined and acceptable. This was liberating. Most traders think risk management is just a rule. They see it as a constraint. In reality, it is the scaffolding that allows you to operate freely within the market. It is what keeps you in the game long enough to see the setups that truly matter. I also built in rules to ignore setups outside my criteria. This may seem simple, but it is one of the hardest habits to form. If the price moves and it looks tempting, or if the news spikes volatility, my rule is simple. If it's not my 20% setup, I don't trade it. No exceptions. At first, this felt like leaving money on the table. But the market is always moving. The right setups will come again. This discipline transformed my trading. Instead of chasing randomness, I now waited for high-probability opportunities, and when they arrived, I executed with confidence and clarity. Part-time traders, listen closely. All of these systems, time blocking, checklists, narrowed playbook, micro resets, journaling, risk definitions, are designed to protect your mental bandwidth. You don't have the luxury of endless hours. You cannot afford to burn through your attention on noise. By building systems around your limited focus, you make each minute count. 1 hour, used correctly, is more valuable than 10 hours wasted in distraction. Finally, the system extends beyond the charts. I scheduled breaks around trading. I respected my energy levels. I learned to say no to just one more trade and yes to clear boundaries. These habits became invisible scaffolding that allowed the visible behavior, successful, focused trades, to thrive. Systems are the bridge between theory and practice. Without them, knowledge alone, knowing about the 80-20 principle, was powerless. With them, my trading transformed from chaotic attempts to precise execution. And here's the beauty. You can implement these same systems. You don't need more time, more capital, or better indicators. You just need structure, clarity, and discipline. Time block your trading window. Build a pre-trade checklist. Define your setups. Journal your mental state. Cap your risk. Protect your energy. These steps transform limited hours into exponential growth because you are leveraging focus over effort, quality over quantity. When I put these systems into place, my trading became predictable in a way it never had been before. My wins became consistent. My losses became contained. My stress decreased. I stopped thinking about trading 24/7 because I knew that when my high-probability setups appeared, I would be ready. And that readiness, built from disciplined systems, became my true edge. Once the systems were in place, I began to notice something profound. My relationship with trading shifted completely. Where before I had been tense, reactive, and constantly chasing the market, I now operated with clarity, patience, and confidence. The chaos was gone. My trading hour became predictable, my decisions deliberate, and my results increasingly consistent. This transformation didn't happen overnight. It was the accumulation of small, deliberate actions over weeks and months. Time blocking protected my mental energy. Checklists ensured I only traded high-probability setups. Journaling revealed hidden triggers. Micro resets and risk management rules shielded me from emotional impulses. Each of these habits compounded, creating a system that not only worked but was sustainable. Sustainability is the key for part-time traders. You don't need to burn yourself out staring at screens for 10 hours a day. In fact, doing so is usually counterproductive. The market doesn't reward time, it rewards clarity. When you trade smarter, not longer, you free yourself from the endless cycle of stress and overtrading. You stop seeing the charts as a source of anxiety and start seeing them as a tool for execution. Over time, I noticed a shift beyond the charts as well. My confidence in other areas of life grew because I had learned to respect boundaries, manage energy, and focus on what truly mattered. Trading was no longer a source of stress that bled into my family or work life. It became a structured part of my day, predictable and controlled. The same principles that helped me isolate the 20% setups also helped me prioritize my life. This is what separates disciplined traders from the rest. Most traders remain trapped in the 80% of noise, constantly reacting, always chasing. They believe more hours, more trades, and more trying will get them results. But the reality is the opposite. True growth comes from focusing on what matters most, and letting go of everything else. The 80-20 rule doesn't just apply to your trades. It applies to your mindset, your routines, and your priorities. I also learned the power of patience. Once I committed to only trading my high-probability setups, I realized that not trading was sometimes the best trade of all. There were days when nothing met my criteria. I could have forced trades, justified entries, or try to make the market bend to my schedule. Instead, I walked away, and that restraint became a quiet victory. Every missed opportunity was actually an avoidance of unnecessary risk. The more I honored that patience, the more my results improved. Consistency became my silent advantage. While other traders burned out or chased impulses, I built a rhythm: one focused hour, one clean execution, one journal entry. The compounding effect of these small, disciplined actions created exponential results over time. I was no longer dependent on luck or timing. My edge came from process. And process, unlike luck, is repeatable, teachable, and controllable. Here's the crucial lesson: transformation isn't about working harder. It's about building a framework where your decisions align with your best self, where emotional triggers are managed, mental energy is preserved, and attention is focused on the 20% of trades that matter. This is how part-time traders can create results that rival those of full-time professionals, even without spending hours glued to the screen. Now imagine yourself a year from now if you implement this. You have your 1-hour block. You follow your checklist religiously. You only trade setups that meet your criteria. You journal your mindset, respect your energy, and avoid impulsive trades. You watch your account grow not because of sheer effort, but because of precision, patience, and discipline. You've built a system that works with your life, not against it. This is the difference between chaos and control, between reactive, anxious trading and deliberate, confident execution, between getting lost in the market's noise and harnessing its movements to your advantage. And this is where the 90% of undisciplined traders fall behind. They never build these systems. They chase randomness, burn out, and repeat the same mistakes endlessly. The final step is action. Knowledge alone is useless without execution. Audit your past trades today. Identify the setups that actually delivered profits. Define the 20% that matters most. Build your time block trading hour. Create your pre-trade checklist. Journal your state of mind. Protect your energy and respect your limits. Commit to the process, day in and day out. The market doesn't reward effort, it rewards focus. It doesn't care how many hours you sit at the desk. It rewards clarity and execution. By mastering the 80-20 principle, you gain not just an edge in trading, but an edge in life. You trade smarter, not longer. You reduce stress, protect your capital, and preserve your mental energy. You become part of the small percentage of traders who consistently win because they understand what truly matters. So here's my challenge to you. Stop trying to do everything. Stop filling your journal with meaningless trades. Stop trading with your emotions. Find your 20%. Respect it. Trade it with discipline. Let the rest go. 1 hour a day, if used correctly, can transform your trading and your life. Trade smarter, not longer. Focus on what matters. Protect your edge, and take control of your trading destiny. The 80-20th rule is your dividing line. Step across it, and you step into a world where discipline creates freedom, focus drives growth, and consistent results are within reach, even for part-time traders.